Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report, where I will show you what's going on the markets, and we'll try to look for decent trading occasions, decent trading setups. But before that, we need to check the calendar. The calendar is rather empty today. We don't have any significant news events. It all starts tomorrow for the British pound because we will have inflation, CPI, PPI, and FOMC minutes, and also it will be PMI's day, so many countries will see PMIs. But, well, as for now, not much is happening, so we won't waste our time checking the calendar. We will just focus on trading because we do have many interesting setups right here, right now on the market, on the euro dollar. Yesterday I spotted a beautiful hammer at the end of European session, so I wasn't sure that this hammer will hold or not. It did. It's a perfect formation. Hammer with a long tail bouncing from 38.2 Fibonacci. 38.2 Fibonacci here, upswing from the beginning of 2017 till the February of 2018, so that's a huge uptrend. And finally this uptrend got a correction, and this correction aimed 38.2. It wasn't only a Fibonacci line, it was also a support here from August, from October, and then from from December. Then it got tested yesterday with a bullish candlestick pattern, and we have a reaction now. On H1 it looks also very nice. Because we do have inverse head and shoulder formation, it depends if you consider this as a left shoulder, or maybe you consider only this, left shoulder, head and right shoulder. It does not matter though, because what counts is that in both cases we have a breakout of the neckline and the price aiming higher. The potential target for this is this green area. Why this green area? Because it was a resistance here and here, and also it was respected as a support here, so most probably it will be tested as a resistance now. Sentiment is positive. For now the price stopped below horizontal resistance on 118.25. After the breakout of formation, the way towards the green area 120.80, the way should be opened, and the price should reach that level in the nearest future. So definitely on euro dollar, the daily hammer bouncing from 38.2 and inverse head and shoulder formation on smaller time frames, that is definitely a positive sign. Positive sign also was spotted on gold, where actually I do have a position, long position on gold. There was this hammer. The hammer was bouncing from the long-term uptrend line, a long tail here. Also on smaller time frames, actually I'm gonna change the account. That was my real account. I don't want to click on anything showing you setups, because it's real money. We got a breakout of the horizontal support here on $1,286. That was a false breakout. That was a candle creating a hammer formation. So false breakout plus hammer plus long-term uptrend line, that gives us a very strong buy signal. Today the price is showing that. As for now, we stopped on a horizontal resistance, so you can see it's all connected. Euro dollar stopped on a horizontal resistance. Gold stopped on a horizontal resistance. But those levels should be eventually broken, and gold should eventually reach $1,305 per ounce. And I think that's the lowest we can get with this kind of a reversal. It looks really promising. So aiming the blue line is, I think we can go much higher. Blue line is the closest that we can get. I think the red line or the green line or even yellow, that should be our aim using this ascending triangle pattern. Next one is Australian dollar to American dollar, where we got inverse head and shoulder formation, left shoulder head and right shoulder here on a horizontal support, like that. Very important one. It was with us since December, March, April, December again. So inverse head and shoulder formation on such important support is a strong buy signal. That's also the head of this formation, and the right shoulder are false breakouts of that support. And we got a breakout of the neckline also. Depending how you're gonna draw the neckline, if you're gonna draw it like that or like that, it's not important, because in both cases this neckline got broken. In this case it got even tested as a support, so broken resistance got tested as a support, and that's a full legitimate buy signal. And the price should aim this resistance connecting recent lower highs since February, or this resistance connecting recent lower highs since January. So that is our aim. At least that's our minimum target for this bounce. So the price should aim the green area relatively soon. Next one is EuroCAD. EuroCAD is doing very good technical job. So downswing correction, downswing correction, downswing correction, downswing. Trend is negative. We are below the uptrend line, below the 38.2 Fibonacci level, so trend is definitely negative. British pound to Japanese yen. I am waiting for this formation. I'm waiting for this flag to unfold to give us a sell signal. So far, buyers are fighting to keep that flag alive. They are trying to protect this horizontal support, this lower line of the flag, but I'm patient. I'm gonna wait for it. So there is no sell signal here yet, but sell signal is still on the table. It's still possible. It still can happen. The price can bounce from this line, break the lower line of the flag, and then those. I'm gonna be patient. I'm gonna wait for this situation to develop, because the potential profit from this is huge. Like a breakout here on a weekly chart can give us thousands of pips. Let's say this is potential target after the breakout. So it's 1,700 pips. I think it's an awesome risk to reward ratio trade, and I'm gonna be waiting for that. WTI oil is advancing higher using those trend continuation patterns. Most recently we do have a small channel up formation. Channel up is getting more narrow. It creates a dangerous opportunity for a breakout, but as long as we are between those green lines, the sentiment is positive. British pound to Australian dollar. After this horizontal support got broken, it's the end of the good times here. I think the time of pain has come. Even if we will have like a small reversal here, we should see the continuation of the drop. This is the midterm downtrend line. So we can see an upswing bounce from the uptrend line, from the horizontal support, and the price should be aiming lower. So yes, it looks like that. That's very probable possible scenario here in this case. New Zealand dollar to Japanese yen, that was a great setup. I mean, this bullish engulfing. I was watching this instrument whole week, for the whole last week, because at some point this candle was a this candle was a hammer. They extended the rise, and instead of hammer, we almost got a bullish engulfing here. It wasn't a bullish engulfing, it wasn't hammer, but it was a piercing pattern, which was also good. Anyway, it doesn't matter how you call this. That candle was showing us a bounce from the long-term horizontal support from yearly lows, from lows from 2017, and this level was important since 2016. So it worked, and it gave us a buy signal, so you shouldn't be surprised that 1, 2, 3, 4, 5 bullish days in a row we're currently having, and that sets the positive sentiment for this instrument. As long as the price stays above the green area, the sentiment for New Zealand dollar to Japanese yen is positive. Now euro to Australian dollar here. Yes, the sentiment was negative since here, and we told you that once the price will get there, we'll have a sell signal. The price did get there, broke the horizontal support here after that. But now if we look on a daily chart, it seems that the correction is coming. The first target for the correction should be at least like a blue line, or even the green one. The long-term sentiment is negative, but in the short term we do have an opportunity for a bullish reversal. British pound to Canadian dollar, drop, flag, drop, flag, drop, flag, drop. What's next? As you can see, the price is bouncing from 50% Fibo, so again, that's not a random place. Sentiment looks definitely negative. We do have a horizontal resistance here. We do have a horizontal resistance here, and the price should be aiming lower in the next few days, definitely. Australian dollar to Japanese yen, that's a good one, and it's similar to Australian dollar to American dollar. You see the similarities. There is this horizontal support. The price bounces using the inverse head and shoulder pattern. It's the same here, inverse head and shoulder pattern, left shoulder, head and right shoulder, bouncing from a horizontal support here. Breakout of the neckline. At some point it was a triangle, so you could receive a breakout of the lower line of the triangle, but the price chose to break the upper line, which triggers us a buy signal with a potential target on the red line. And the next one is Australian dollar to Canadian dollar. As you saw on my trading account, I do have this position. It's already protected with the stop profit, so it's not on the stop loss, it's on a stop profit. And that was an inverse head and shoulder formation, very good one. It wasn't happening in a random place, obviously, because it was happening on the long-term horizontal support. The price broke the horizontal resistance here, made the support. So I bought somewhere here, stop loss was somewhere here, now stop loss is below those, somewhere here, yeah. I think, yes, my stop profit is, because we got a flag, so my stop profit is somewhere here. And I bought somewhere here, like here. And hopefully the price will advance higher. I wouldn't like to close this position too early. We get a strong optimism at the beginning of European session here. We broke from this downtrend line, but now buyers are giving up a little bit. But hopefully those daily lows will survive. So my stop loss is on daily lows. It's always an important level. If we go from daily highs to daily lows, it means that there is no demand here, and there is no reason to keep this position alive. Let us see other instruments. We do live analysis. I'll start with Bitcoin. Because we had some optimism, let's say here, but it looks like it's all gone. On H4 you can see this upswing from April, but it seems like traders maybe do not ignore that, but they are not taking advantage of it. The price is creating a bigger triangle. Breakout of the upper line of the triangle will give us a buy signal. Breakout of the lower line will give us a sell signal. Most recently we broke that line, which started a descent here. And that's it, actually. We don't have anything super significant here. Let me see the DAX. DAX is still in a positive territory, even despite the fact that we do have recent candles are black, so negative, because we are still above the horizontal support here. We are above the midterm uptrend line, let's say like that. Even like this, even a breakout of this line shouldn't cause a big harm, because we are simply very high, so it's nothing strange. Why we stopped now? You can see why we stopped now, because it's an important horizontal resistance. Breakout of this resistance will open us a way towards those highs. We will see how the situation will develop on DAX. Dollar index. You can see the reversal on dollar here. Started yesterday. On dollar you had a hammer, so on the dollar index you had a shooting star. If you're aware of the correlation between those two instruments, you shouldn't be surprised that it's happening like that. And it looks like this correction will be sustainable. We also do have this head and shoulder formation. So on euro dollar we had inverse head and shoulder formation. Here we have head and shoulder formation. We already broke the neckline, which should give us a negative sentiment for the next few hours, actually maybe even days. Silver, yeah, we can check silver. I remember that there was an interesting trading setup, because silver is in a sideways trend. Here there is this horizontal resistance where we had a false breakout. So for a long-term situation on silver, we need to see the breakout of either the upper line here or lower line here. We are close to the center of the triangle, which actually, in terms of the triangle, is the worst place ever for trading. Let's look for more decent trading occasions on the market. Maybe let me analyze like major currency pairs. For example, American dollar to Canadian dollar. As you can see, I didn't have cable in my charts. American dollar to Canadian dollar. There was this nice sideways trend and the false breakout, but now the situation does not look good from the technical point of view, unfortunately. Let's see American dollar to Swiss franc. That's a bit better because that's a flag in an uptrend. If you want to trade it, you need to wait for this red line, upper red line. If the red line will be broken, we'll have a decent buying opportunity here. Australian dollar to New Zealand dollar. Unfortunately, no good trading occasion. New Zealand dollar to American dollar. Also bounce from a horizontal support. But this bounce is not very technical, so if you want to trade against American dollar, you have much better instruments than, for example, New Zealand dollar to American dollar. I'm wondering what's happening on euro to Japanese yen. They are trying to defend horizontal support, but nothing significant. Okay, those instruments I have. British pound to American dollar. Yes, that situation is definitely not tradable, at least for me. I don't like this kind of movements because it's a sideways trend. It's nothing interesting. It's the place where most of the traders, they lose money. Because you earn money in trends, you lose money in sideways trends and sideways movements. What instruments can we check? Euro to New Zealand dollar. Here also we are waiting for a correction of the euro. The price is creating a hammer candle. Looks okay, but there is no trading setup here, unfortunately. A euro CAD, do you know? Or do you? I think we talked about euro CAD then. But also it's nothing special. Well, the situation is bearish, right? Because you can see that. No, we had euro CAD, obviously, yes, I remember this. Even I draw the same trend line. So you see that the eye is seeing the same things. Oh, euro to British pound. This is one of the best instruments. Many people don't like it, but I don't mind. I had some good trades on euro to British pound. I won't have those trades anymore. At least for now, because the situation does not look good. That's a sideways trend. We are on the same levels as we were at the end of March. We had ups and downs. I'm not a fan of this. So I'm skipping my... I'm not gonna participate in this. American dollar to Japanese yen. That is like one of the most important instruments. I know why the turnover is so big, etc. But I don't share enthusiasm towards the dollar to yen, like a trading enthusiasm. I'm not forcing myself to trade here. I seldom trade American dollar to Japanese yen. Because for me it's not very technical. But if we are here, let me try to look for decent. Let me try to estimate the situation here. So we have this correction, which we can copy, and it's almost the same. So we can say that we almost have a correction equality pattern, because this one, this correction is 740 pips. This one so far is 680, so we still miss a little bit. But we stopped on a downtrend line, right? So that can be significant. On a daily chart, we have a shooting star. Okay, fair enough. Let me draw the trend line of this correction. Yes, okay. I start to like it. That's not very common for American dollar to Japanese yen. Okay, I like this resistance. No. What I want to do is to change the color of this. Okay. And now also here. No, not like that. I'm gonna draw a neckline here. That's a neckline. Breakout of the neckline triggers as a sell signal towards here. Breakout of this uptrend line gives us a sell signal towards the horizontal support. So let me draw that for you. Maybe blue. I will be pleasantly surprised if the price do something like that. Here. Here. Yes, I wouldn't mind this kind of a movement, which always based on the correction equality pattern, on the main trend, and on the fact that the price made a shooting star on a downtrend line, and the uptrend line is very steep, and that the correction on the American dollar should be a bit longer, and it's just a start. So I'm looking forward for this kind of a movement. Let me check my position. So Australian dollar to Canadian dollar is reversing. That's good. If the hourly candle will finish like that, that will be a good sign. How's gold? I don't think that gold is... gold is also okay. Everything is smooth. Those were good trading setups. As I said, your Australian dollar to Canadian dollar is already protected on the stop profit. Gold has still a stop loss, but the stop loss is lower than the stop profit. So from those two positions, even one will be win, one will be loss, but still it will be on profit from my side. Small, but it's just the beginning, right? It can still develop into a very, very profitable trade. Now all you need to do in trading is to be patient and to leave those positions alone. Try not to suffocate those positions, so give a price space to move. And now the boring part of trading comes. Obviously, everybody would like to have this boring part, so counting for profits without any risk. But for that, certain amount of researches have to be done, and work in front of the computers, in front of the screens, education, discipline, patience, discipline, even more discipline. I hope you eventually get that, every one of you, and I'm here to help you with that. And stay with us. Now we'll have a short break, and after that we'll have a webinar about the price action. So I will get together all the price action principles, and I'm sure that you won't regret attending this webinar. So I strongly advise you to come for my price action webinar, which will be in half an hour. In the meantime, visit our Twitter account and our website alpari.news and our YouTube channel for the portion of good trading information. Thanks very much and goodbye.